Warren Buffett and Berkshire Hathaway just ended up buying nearly $1 billion into a company, and a lot of people are saying this is insider trading because of what just recently went on with this company in a new acquisition that they're experiencing. So, we're going to go over whether I think this is insider trading or not, whether I think this stock is a buy, and how I am playing it. And that stock is nonetheless other than Activision, ticker ATVI, Activision Blizzard Inc. And we'll talk about Warren Buffett's buying. Like, if you go read the news, Warren Buffett's Berkshire Hathaway, perfectly timed and out of left field investment. A pretty popular tweet that we're seeing from Ross Gerber looks like Warren Buffett pulled off $1 billion insider trade, somehow buying Activision. Didn't know Buffett knew of Call of Duty, hasn't owned anything like this ever, but he's good friends with Gates. One of my favorite YouTubers, Joseph Carlson, kind of comes out and agrees with me, saying that he doesn't buy it. I don't think that Warren Buffett did this in the acts of insider trading. And I say that for a number of reasons, but I just don't see that happening. I think that he bought this with an outlook on the market and the gaming and metaverse and things like that, and thought it was a good buy. Here is a report of them buying the stock, their 13F filing from Valentine's Day, 14.6 million shares, which is a lot, okay? So if you go ahead, and we'll scroll up just to make sure it's the shares, we got to scroll all the way up. Sorry, this is going to take a little bit. But what you'll see is that I don't think this is insider trading at all. We're seeing a lot of activity on this stock just looking. So their shares reported value was about $975 million. We go ahead and look right here, just scroll down a little bit. It'll tell us they bought $1 billion into here. $975 million, 14.7 million shares in the fourth quarter of 2021, right before this whole deal kind of went on. So there's a lot of different things happening, but they brought it for an average price of $66.53. Microsoft's offer to buy out this company is valued at $95 a share. And so there are a lot of talks about should you be buying the stock, okay? I don't think it's a current buy at the current moment, just because different things that are happening in the company. The only thing I think I see going for it is one, it's in a good market, and two, there's an acquisition coming out that values the stock higher than it currently trades at. However, I think there's a lot of different things going on right now. We saw the stock is not performing very well. Over the past year, it's down 21%. Past 5 years, it still is up very well. But look how volatile this thing is. It goes up really nice, some bad things happen. Goes up really nice, some bad things happen. And if it wasn't for this acquisition, I think this stock would still be down pretty bad. It would not be up in the 80s. It would be trading around at $60, $65. Now, Morningstar gives the stock a fair value of $92, but this was reported after we saw Microsoft saying they want to value it at $95 a share. So let me go ahead and talk about some things that happened with Activision recently. Over the past year, 2021, it had a massive decline, and it was because engagement levels weren't as good. There was a California-based agency against Activision for sexual harassment and discrimination. They also announced a delay in 2 of their most awaited games, and the CEO kind of was found being aware of the misconduct that happened in the company when it first initially sent down the shares. And so I don't think that's the best management, in my personal opinion. This man is still the CEO, and there could be things about it. I'm not insider. I don't know everything. I don't know the whole story. I'm just saying what it looks like on paper, because that's what we've been given. And I don't know if that's what I want to be investing in, is companies like this. And the financials, if you go ahead and look at things, revenue growth is down 10% year over year. Now, earnings have done pretty well. Cash to debt's not terrible. Payout ratio is not bad at all. But quarterly financials, they're kind of all over the place and declining ever since 2020, since COVID levels. And you don't really like to see that. And I don't think that's a good thing. I think that the company did really well over COVID because people were at home. They had nothing to do other than play video games and things like that. And so what do? They played video games. And then COVID kind of, it's still a thing, but it's still kind of, it's not as intense. And now people are chilling and they're doing their other different things. And Activision is kind of seeing this. And I do think that they're going to need a massive rebound in order to recover. They have good analyst expectations for the years coming, but I'm not buying the stock. They do have a nice dividend yield of 0.58%. However, I'm not buying the stock. I think it's a potential buy for 2 reasons. just because, one, it's valued at $95 a share according to Microsoft, and if that deals go through, I'm not exactly sure how this will work. If they'll receive cash, if they'll receive Microsoft stock, it's going to be cash. But you get what I'm saying. You don't know if the deal can change. Some things like that happen, and there also is talks that, hey, maybe this deal won't even go through. Okay, it's expected to close in Microsoft's fiscal 2023, which begins July 1st of 2022. So it could happen this year, it could happen in 2023. But they're saying you should buy it because it's easy money. It's valued at a higher premium than it should be traded at. And two, it might not even happen, so you might be buying shares and benefit from kind of the news saying, hey, this stock should be valued for more. So I'm not currently buying this stock. I just want to put this video out there because there's a lot of talk about Warren Buffett saying showing that he did buy the stock. There is price targets giving about 17% upside, but 9 buy and 12 hold. I don't think it's a current buy in this market. I think it's better to buy stronger financial standing companies, companies that I don't want to say are more well-foundationed, but have stronger cash flows, we could say, and different things like that. But that's going to wrap it up for this video. It's a quick one. I just want to talk about my opinion on that. Hopefully you enjoyed the video. Make sure to subscribe to the channel. Turn on post notifications so you miss out on any future videos. Check out M1 Finance also as well in the pinned comment or description down below. Thank you for making it to the end. Subscribe, and I will see you at the next video.